And of course, after all the presentation, we'll also have room for more questions. So if you come up with questions during the other presentation for Claus, you're still welcome to mention these in the Q&A session. So now let's go to the next presentation. Claus, if you will unmute or mute your microphone, then I will let the floor to Graeme Moore, which has been working with blockchain technology for many years, and he's going to talk about the transition from general purpose to the purpose of built infrastructure of tokenization. So, Graeme, the floor is yours.
Awesome. Thank you, Jakob. Yeah, I'll go ahead and share my screen and just get right into my presentation here.
Yes.
So, can you see it?
Yes, seems to work perfectly.
Awesome. So, as Jakob said, we're talking about the transition from general purpose to purpose-built blockchains today. And so we'll get into a bit more of what that means, but the idea is we have a lot of general purpose infrastructure in the blockchain landscape, specifically for security tokens, which is primarily what we're talking about today. And we're starting to see a shift away from that, and I'll talk a bit about why, what are some of the benefits, what are we hearing from industry players such as banks, financial institutions, etc. Just a bit about me. I got my economics degree at a Canadian university. And so even though I do consider myself largely Canadian, I am half Finnish and a quarter Norwegian. So, you know, it's nice to be here on the Nordic webinar with all you folks. It sort of feels like home, so that's always nice. So after my economics degree, I worked at a $25 billion bond fund. I worked at the largest independent investment advisory firm in Canada. I was the first hire at Polymath back in 2017. So me and the two co-founders working out of one of the co-founders' apartment. So really from the ground up in terms of watching the security token industry really take hold and take off has been very exciting for me. Shortly after I started at Polymath, I joined Red Swan as an advisory board member. So if you see Ed Nowakdi on the call, who I believe is speaking next, him and I have been working together for a number of years now. On all things real estate tokenization, which has been a lot of fun. And then finally, I'm the author of the first ever ABC book about Bitcoin. So if anybody has a 2-year-old or you know a 2-year-old or 3-year-old who's looking to learn their Bitcoin ABCs, go check out the book. And if anybody actually is not a fan of Bitcoin on the call, go check out the Financial Times article where they kind of make fun of me and make fun of Bitcoin with the 26 letters of the alphabet. It's quite hilarious. Just to give a background on Polymath, so our vision is a world where everyone has equal access to economic growth. How are we trying to achieve that vision? Well, we're automating and simplifying regulated markets through blockchain. And then more specifically, what are the exact strategies we're using to do that? Well, we're contributing to a dependable, compliance-focused blockchain. We're connecting market participants, so exchanges, KYC providers, broker-dealers, custodians, et cetera. And ultimately, we want to grow the security token market. Klaus touched a bit on this, but I'll just give my take on things in terms of what are security tokens. Well, they're digital representations of financial assets. So equity, stocks, bonds, real estate, commodities, structured products, revenue share agreements, investment fund shares, et cetera. And then not all security tokens have the same properties. So I think it's important to point out you can have an asset tokenization where there's sort of the traditional financial asset that exists off-chain, so a share certificate that sits in a lawyer's office or in a transfer agent's office. And then what you're doing is digitizing that and creating it as a security token so it can trade on-chain. It can be represented on-chain in a more efficient and automated way. So that's one kind. The other kind, which we haven't really seen yet, largely in the world, primarily I would say because regulators are not up to speed yet, but I think we'll see this in the next 2 to 3 years, is where there's an actual asset origination on chain. So there is no off-chain share. The token is the share. And so many regulators are not comfortable with that yet, but I think that's what we're going to eventually see. And that's when we're going to really start to see a lot of the benefits of security tokens: efficiency, automation, transparency. We're going to see that since the security itself is natively digital. It has not been digitized, it's natively digital. And that's when we're going to see a lot of the benefits. And so I would like to ask a question. Which blockchain would you choose to build tokenization software connected to an ecosystem of regulated service providers, right? And so for, I would assume, probably 75% to 100% of people would say Ethereum, right? That's where we started at Polymath back in 2017. We started building all of our technology on Ethereum. It was the place where everyone was building. It had a community of developers building around it. It was where all of the tokenizations to date had been happening. It was where utility tokens using the ERC20 standard were all going on. We said, okay, yeah, well, let's build on Ethereum. You know, we want to get to market early. We want to have people using our technology, and the technology works. We proved that we could build a protocol that was able to have compliance measures, like, for example, preventing party A from transacting with party B, only unless party A and party B meet the requirements of the security token. So whether that's both of them being KYC and AML verified, whether it's both of them in terms of the trade that they're conducting, resulting in the proper number of shareholders. So just as an example, in the US, if you want to be a private company, you need to have less than 2,000 shareholders. So if party A's transaction with party B results in their becoming 2,000 shareholders, we can actually, through software, automate that trade from being canceled. So a lot of things like that we're automating through the use of smart contracts and through blockchains, and we started building that on Ethereum. And so, as I said, we had that market test with Ethereum. We built what we call the Polymath Token Studio. So anyone can go and create a security token using our protocol, just point and click a few buttons, input a few characters into easy to use forms. No developer work required whatsoever. So if you're not a developer, you can create a security token today. But what we noticed in 2018 was there was a lack of standardization. Every security token protocol was being built kind of ad hoc. Exchanges were building their own protocols. Issuers were building their own protocols. KYC providers were building their own protocols. And we said, okay, well, this isn't really going to result in a huge amount of security tokens being created because everyone's speaking a different language and it's really hard. So what we did is we got a lot of the industry leaders together, what we called the Security Token Roundtable in 2018, and we proposed ERC 1400. And so one of the key members at that roundtable was Fabian Vogelsteller, which, if anybody is familiar, he created ERC20. So we got the guy who made ERC20. We said, okay, what does a standard need to look like, not for utility tokens, which is what you created, but security tokens? And so we came up with ERC 1400, which is now the most widely used standard in the world. Klaus mentioned that DigiShares is using that. Red Swan is using that on this call. Consensus uses it with the Doriel protocol. There's a real estate company in Germany that's currently using it, Custodian that's based in Singapore, and the UK, who recently went public on the NASDAQ stock exchange. They're using ERC 1400. It's really, really exciting to see that ERC 1400 has achieved this level of adoption. Also, the government of Norway recently signaled their support for ERC 1400 as a good standard to use for tokenization. And so we did that. We said, okay, great, standardization. Okay, all our problems are solved, right? But of course, your problems are never solved in the startup world, especially when you're in a new industry. So in 2019, we said, okay, can we get real product market fit? Can we grow the ecosystem, and can we expand geographically? So we expanded. We're primarily in North America back in 2018, but then we said, okay, we need to expand into Europe and we need to expand in Asia, because we saw the regulators being much more positive on security tokens and their ability to enact compliance than we did at organizations like the OSC in Ontario, Canada, where I am right now, and at the SEC in the States. So we saw Europe and Asia as very, very exciting jurisdictions for us. And so we had over 200 security tokens created by the end of 2019, which was really great. But there was still another key challenge, which was institutions are not adopting this technology. And so we started talking to more and more financial institutions, you know, the large banks of the world, the large custodians of the world, the Fidelities, the State Streets, the Morgan Stanleys, the Goldman Sachs, et cetera. And what we kept hearing over and over again was that Ethereum does not work for them. And so what we decided, okay, we need to build our own blockchain. We need to build a blockchain that's purpose-built from the ground up for security tokens. And so that was when we announced Polymesh, which is our security token blockchain back in 2019. And so in 2020, we've been focused on building Polymesh and delivering it in phases. So we launched our first testnet in May of 2020, and we launched our second testnet recently. And so we're continuing to work with both the traditional participants, right? So the banks, the custodians that you'd know in the traditional securities world, but then also with the new market participants. So the DigiShares, the Red Swans, the new custodians that are natively digital, the new banks that are natively digital, working with them on what this blockchain should look like. And so, as I mentioned, ERC 1400 is the most widely used standard in the world in terms of security tokens and the number of tokens created. But using that as sort of the catalyst to how can we construct an entire blockchain, not just a protocol on Ethereum, not a protocol on a blockchain, but an actual blockchain. So using a lot of the inspiration from ERC 1400 to do that. And so I talked about the banks and the custodians and these large financial institutions. We kept hearing the same four things over and over again. The first one was governance, specifically relating to forks. So if anybody's familiar with the Ethereum Classic fork, let's say you had a security token on Ethereum and then the Ethereum Classic fork occurs. Which one is the real security token now? The security token exists on both chains. It introduces a number of almost insurmountable governance problems where shareholders might think they have now, it's almost like a stock split. They have two tokens now. There needs to be a lot of governance at the corporate level put in place to decide how do we deal with forks. And that's just something that companies do not want to have to deal with. So they said, we need a blockchain that's fork resistant. So as upgrades are made, forks actually are not possible to the network. So that's something we did with Polymesh. The second one was identity. And so we've built a protocol on Ethereum that allows for identity to work. So the issuer of the security token has what's called a whitelist. So that whitelist contains all of the Ethereum addresses of individuals and entities that are allowed to hold tokens and that are allowed to trade tokens, and that works. It works for the regulators to be able to do that. The regulators can see, okay, I can clearly see that 0x123 can only transact with 0xabc, provided that they're both on the whitelist and they both meet the issuer's criteria. And so it works, but it's not an incredibly elegant or scalable way to do identity on blockchains, specifically for regulated assets. And so on Polymesh, every single user that is able to touch the chain in any meaningful way, they must go through a KYC and AML process. And so even above and beyond that, the node operators on Polymesh, they must be regulated financial entities. And so we have a few of these regulated firms that are now running nodes on our testnet, and we're excited to announce those names very shortly. And then we'll have a few more once mainnet goes live. And again, it comes back to the idea of how do you get the world's largest financial institution to use a blockchain for regulated assets? You need to do these kinds of things. You need to take care of governance, identity, confidentiality. And so one of the attendees recently asked about confidentiality. You know, you have all this data that's on chain. Yeah, a lot of banks don't like that either. Hedge funds don't like the fact that someone over time might be able to figure out which address belongs to which hedge fund. And oh, we see they're making $100 million buy order of this security. Let's front run them, right? And so confidentiality is another huge piece of what's important to financial institutions and for security tokens. And so we've recently put out a paper on how we are tackling confidentiality on Polymesh. I think it's really exciting if anybody wants to go take a read. And then finally, compliance. So Polymath was really built because of compliance. It was how can you have a token, right? Tokens were a very, very exciting thing in 2017. And one of our founders, he said, okay, well, how can I tokenize my private equity fund? And then he went, oh my God, the compliance that's required for issuing a regulated asset is very, very high. There's a lot of things you have to do. And so really that's why we were built, is how can we allow for the compliant creation and management of securities on blockchains? And what we've noticed when you're using a general purpose blockchain like Ethereum, for example, all of the compliance measures that you're doing are second layer smart contracts that require gas. They require Ethereum in order to call them. So every time a trade happens between A and B, you're calling a smart contract and saying, hey, make sure that this trade is able to occur. And so the gas costs get really, really high. And some of the other security token companies that are building on Ethereum, their protocols are already effectively broken. The gas costs are much too high to transfer between parties. And we're talking about thousands and then hopefully eventually millions of transactions every second or every minute on blockchains. And we can't even really do 5 or 10 because just the fees are much too high. So a lot of what you have to do when building a blockchain for security tokens is you have to have compliance built into the ledger. So at the base layer, rather than having everything be second layer smart contracts, it results in a much more elegant and much more scalable solution for how to do security tokens on blockchains. And a really good parallel in terms of thinking of, okay, well, I mean, Ethereum works today, right? People are using it, they're building on it. It does work for security tokens. It absolutely does. We're very proud of what we've built with ERC 1400 and what companies like Swan and DigiShares are doing today. But when we look back at the internet, we see people in 1991, for example, had 14.4 kbs of speed, right? That's not megabytes, right? That's kilobytes. And so, you know, you might remember downloading a photo on the internet and you'd get like one tiny piece at a time. And then people figured out, okay, well, cool. We can get, you know, we can increase the speed by 2 times in 3 years. That's great. We can increase the speed by 4 times in 7 years. That's great. But you're still using phone lines, which are designed to carry voice only for the use of transferring data. And it just doesn't make sense. So what people realized as more and more users became on board on the internet, and they said, okay, you know what, we have to build a purpose-built infrastructure. We need to get off phone lines. We need to go to fiber optic cable, right? Because what people really want is they want 300 megabytes. They want 500 megabytes per second. They want a gigabit of speed. And so, yeah, you can make improvements on the existing phone lines and things will work and they'll get better, but it's not the same as ripping out the existing infrastructure and using a purpose-built infrastructure, which is what we're doing, right? So as the same way the internet went from phone lines to use fiber optic cable as users demand these upgrades, we believe, and the more and more we talk to large financial institutions, the more we see that we're moving from a general purpose infrastructure like Ethereum to something that's purpose built, more like Polymath. And as we're building this out, you know, there are a lot of questions that you have to ask yourself. Is it going to be public? Is it going to be private? Is it going to be permissioned? We settled on a public permissioned blockchain. So anyone can run what's called a light node, so you can see what's occurring on the blockchain. So regulators are very big fans of that versus something like Corda, for example, where it's completely private, where regulators actually have to go in and they have to do separate audits after the fact, and they have to talk to the node operators, and they have to get the specific data from them. So regulators actually really like the public aspect of Polymesh, but it's permission, which again, the regulators like, and also the financial institutions like, where anyone cannot do anything they want anytime. People have to pass KYC and AML at a basic level, and then you have to pass the asset issuers KYC and AML if you want to interact with different assets. So regulators and financial institutions and issuers, they told us they really like the public permissioned aspect, and that's how we built Polymesh. There's a lot of other aspects. We can talk about that probably another time, getting a lot more into the technical weeds in terms of what we used in terms of a framework. We used the substrate framework, which is what Polkadot uses as well, with a few slight tweaks to it. You know, non-probabilistic finality, very important. So using proof of stake versus proof of work, where let's say you have a proof of work blockchain and you're transacting security tokens. Well, theoretically, someone could roll back that transaction if they 51% attack the network successfully. Whereas with proof of stake, with finality gadgets, you have non-probabilistic finality. So once a trade settles, it settles forever until the end of time. So that's just one of the really big things that I want to talk about there. In terms of where we're at now, so governance, right? We've built a chain that is fork resistant. Identity, we built a chain where you must pass KYC and AML to get on board. Confidentiality, still working on it, right? Very huge undertaking. The white paper is out. We have some code that's live now, but we're still figuring out sort of very end of that. And then compliance, of course. We now have something that we call financial extensions, right? And so in terms of how compliance works on Polymesh, a lot of that is now baked into the base layer of the chain. So it's not necessarily all smart contracts. A lot of it is more taken into account at the base layer, which saves a lot on fees when people are transacting. So I mentioned earlier, we're looking at a March launch date, so Q1 2021. Right now, we're on our second testnet called Alcyon, settlement engine testing, all of that good stuff. And of course, now I think it's time to talk about what we're all here for, which is real estate tokenization. And so this is a piece from actually earlier this year, just before lockdown and everything, all that fun stuff from CoinDesk. So a startup tokenized $2.2 billion in commercial real estate through Polymath. So that's Swan. So that's Ed who's speaking after me. And so I believe, Ed, I'm sure you'll correct me once it's your chance to speak. I believe that number is a little bit higher now. But so what's happening in terms of Red Swan and Polymath is Red Swan is using the protocol and the tools that we've built. So Red Swan doesn't want to have to build compliance criteria on blockchains, right? They want to talk to real estate owners. They want to appraise their real estate, and then they want to help sell their real estate. And they want to help the investors in that real estate be able to access more properties and to be able to trade those properties in a secondary market. They don't want to have to deal with smart contracts. They don't want to have to hire 20 developers like we have at Polymath building protocols from the ground up. They don't want to have to speak with regulators every single day saying, okay, is what we're building compliant? They don't want to have to plug in all of these different aspects of the ecosystem. They want to focus on what they do, which is real estate, talking to real estate owners, appraising real estate, selling real estate, and helping other people sell real estate as well. So that's the interaction between Polymath and a lot of other players in the market. Is they want to focus on their business. They don't want to have to touch the blockchain. They don't want to hire a blockchain developer. They want us to take care of that for them. And so if you went to Red Swan's site today, you'd see some of these beautiful properties. You know, you can invest in primarily USA commercial real estate, Class A real estate. You can see all of the examples there. And it's very, very cool that you can now invest in real estate, right? Look at the minimum investment sizes. So the third row there, right? 11,000, 9,000, 16,000. Today, if you're trying to invest in some of these properties, the minimum investment size would be more like 5 million or 10 million, or maybe even 50 million, right? And so the interesting thing here is that tokenization, because it allows for really large increases in efficiency, automation, it can bring down the costs of what Red Swan has to do in terms of how they can create a liquid secondary market for these shares. It makes trading in the secondary market a lot more inexpensive. And so you can bring down the minimum ticket price for what someone needs to do to invest in one of these properties. And so that's what's really exciting to me about real estate tokenization is you unlock this previously private market that was only reserved for people with $1 million, $10 million, $100 million to invest. You bring it down for the average investor who's got $9,000, $11,000, $16,000 and just wants to buy some high quality real estate. And the other really, really cool thing that I love about real estate tokenization. So today, let's say, so I'm usually based in New York. So this is a map of Manhattan. So let's say I wanted to invest in Class A real estate in Manhattan. What would I do? I have $10,000 that I want to invest. That's like typically what someone around my age might want to throw into the real estate market. Well, I can buy a REIT. So I can buy a real estate investment trust, and these are where the buildings are. You know, they're in Manhattan. They're pretty much what I want to invest in. They're buildings owned by good property owners, but I can't get hyper targeted, right? And so what I think is going to happen in the future is every single unit of every single real estate asset will become tokenized. And what's going to happen is I can create my own portfolio of assets anywhere in the world with hyper specificity. So I can only buy Fifth Ave real estate above 34th south of 86, right? I can only buy Class A real estate above 34th south of 86. You can't do that today. If you wanted to do that today, you would have to have billions, maybe even trillions of dollars. But I'm going to eventually be able to do that by myself creating my own portfolio, or by someone else even just on the internet creating their own portfolio with this very specific investment case. And so even then, let's say I wanted to go, instead of just buying a regular real estate investment trust, I throw $10,000 in and having buildings all around Manhattan, I can buy only interior facing, so Central Park facing real estate that goes around Central Park south of 86 above the 7th floor, right? So maybe I don't want to own any units that are the 6th floor and below, because I know that people love the view of Central Park. That's what we're going to be able to do in the future with real estate tokenization, because the costs are going to come down so much for people to originate these assets, to trade these assets. We're going to be able to get so hyper targeted that I can buy exactly what I want with $5, $10, $100, and I can then chop it up and have a scenario like this where I'm buying only above the 7th floor, interior facing units, right? So we can even chop up the building itself, right? You can't do that today. it's essentially impossible to do that today with a small sum of money. And so that's what gets me very, very excited about this technology, is people being able to do things that you can't do today, right? Today, we're still sort of improving capital markets, and we're making things more efficient, and we're making things better. But what gets me really excited is, when can we start to do stuff that is not possible today? And so we're getting very, very close to that. We're year 2, 3 away from that, and it's going to be very, very exciting when that happens. If you want to learn more about Polymesh, or you want to send me an email, I have my email there. Feel free to take a photo of that or something. I can also write my email in the chat after this, but always happy to chat anytime about anything Polymath, security tokens, Polymesh, Finnish hockey goalies, as I believe Tuukka is a Finnish hockey goalie. Anything, send me an email anytime if you have any questions. Thanks, everybody. Appreciate it.
Thank you very much, Graeme. Very interesting. Pleased to have you. I know that you have another webinar coming up. Would you have time just for a question or two, maybe?
Yeah, for sure. I have about an hour, so I'm perfect.
Oh, that's good. That's great. There's a question here where I think you could answer, and you see, it came actually just when Klaus was speaking, but I think you can maybe also answer this. I think this is pretty much about the whole idea with the blockchain. Doesn't centrally saved information lead to a single point of danger that makes it basically easier for the works of hackers?
Yeah, so the interesting thing there is, and I think Klaus touched on this, there's no PII being stored on the blockchain. So there's no personal identifiable information being stored on the blockchain. So the interesting thing about that is, right, you can't hack the information that's on the blockchain because it's already all publicly available. Right? Like, I can see 0x123ABC has 80 tokens, and those tokens are the asset A tokens. And so I think the important thing to note there is, you can't really hack the information that's on the blockchain. It's already there. I can already see it. And so the important part is making sure that you aren't storing any personal identifiable information on the blockchain. And so that this is something that we talk about a lot at Polymath, especially with GDPR now that we're dealing a lot more in Europe, ensuring that regulators understand that the information that's there is not necessarily harmful to the users. So far, there hasn't been any very detrimental regulations to come out of any of the European countries with regard to, okay, well, you can't even have 0x123ABC on the blockchain. So far, we're still good. A lot of companies in the industry are talking to regulators every day saying, seriously, like, it's okay if 0x123ABC is on the blockchain forever. It's not going to really harm anyone. And so I think that's the important stuff to talk about there.
Thank you very much. I just see that's a few other questions coming in, so just hang on here. I'll just see here. So here's another one directly about Polymath. Can Polymath offer services to a decentralized real estate cooperative that intends to trade its tokens between members of a decentralized cooperative?
Yeah. Yeah, that's
short and sweet. Yeah.
Yeah. Yeah, I mean, right. I think, yeah, so Polymath doesn't provide much services. We don't provide much in the way of services. We're not an advisory firm. We're not going to help you, for example, draft your legal documents. We're not going to help you structure your company in a way that is best. What we're going to do is we're going to provide you with the tools necessary to do whatever you need to accomplish, whether that's creating a security token, whether it's ensuring that only certain people can hold the security tokens, whether it's white labeling our technology because you want to build your own Polymath token studio for your own clients. So yeah, the example you gave, yes, 100%, you can do that. But it's not so much of us really advising and making sure that you can do that. If you have the ability to go to our GitHub and use our code, or if you have the ability to go to the Polymath token studio and create a security token and manage it, then you can do what you're suggesting.